If you're working a job, you're replaceable. If you died, or if you could not go into work tomorrow, the company is going to find a replacement for you in the next 4 weeks. And maybe you're really good at your company. Maybe you're really good and they don't want to let you go. That's good. That doesn't make you irreplaceable, because if you couldn't go into work tomorrow, they're going to have to find somebody to replace you. They might not be as good as you, but your equity in that company isn't going to keep paying your family if you stopped working there. Because you might build great rapport with the company. You might be very valuable to the company. There's nothing wrong with that. That's a good thing. But I'm talking about for your own personal finances. If you can't go into work anymore, your company's not going to keep paying you. Maybe you have a pension, but most companies don't offer pensions anymore. And so now where's your equity? And this is where now you are building your skill set when you work at your company and you work up in the company. When you build your skill set and your knowledge and your ability to provide value, you can earn more for every dollar, for every hour that you provide. You earn more dollars for every hour that you provide. But if you stop going into work tomorrow, your paycheck's also going to stop. So again, where's that equity? What does equity mean? Equity means you can continue to keep getting paid without you having to continue going into work. And this is why the equity in your home is one of the worst kinds of equity, because the equity is essentially dead equity. It doesn't do anything unless you sell it. And so this is where, well, what are the alternatives? When you take your money and you go and put it into a stock, if you go put your money into the stock market, now you're building equity in this company, in this business that you're investing in on the stock market. If you were to invest in the Amazon Corporation, I'm not telling you what to invest in, just an example. If you were to invest in the Amazon Corporation, now Amazon has a CEO that's working to drive up the profitability of Amazon. They're working to drive up the stock price of Amazon. And there are thousands of employees at Amazon that are working to make the Amazon company grow, to make more money, to produce the value that Amazon provides. When you buy one share of Amazon, you become one of the owners of Amazon. Just like that, when you go out and you invest in rental properties and you're building that equity in rental properties, now you're buying this land and this building, which is producing you cash flow. You have equity in this building that's producing you cash flow. Why? Because now there could be people living there. It could be an office that's using your building. It could be a restaurant that's operating at your building. It could be whatever type of building. Now, somebody is going to live in or use your property, and in exchange for them using your asset, your equity that you work to buy, you're going to get paid with cash flow. And if you do it correctly, the cash flow that you're getting, the rent that you're getting, should cover all your property expenses and put some money in your pocket every single month. So now compare these equities. You can't go to work tomorrow because you got into a car accident. The company decides they're not going to keep paying you. What do? Well, if you have that sort of equity, you can keep getting paid. You can keep having your assets working to produce an income. If it's a rental property, they can pay you with cash flow. If it's dividend paying stocks, they can still pay you dividends. Now you might be thinking, but Jaspreet, it's going to take a lot of money and a lot of time for me to go out and actually own enough assets to produce a significant amount of cash flow. And you're right. It does take time. This is why I said, again, in the beginning of this video, it takes money to grow your money, but it doesn't take money to make money. If you want to make money, you need the hustle, you need the drive, you need the work ethic, and you need the ability to take risks, and you need the ability to learn. If you can do those things, you can go out and earn money. But if you want to grow your money, now you need more money. And this is what your equity is doing. When you're trying to create or buy this equity, now you're working to grow your money. And this is where the real wealth is built. It's about buying more stocks, buying more real estate, investing in other businesses, investing in other things that are paying you. Now, there's different ways that you can get paid. You can get paid with cash flow, or you can buy investments that go up in value, or that you're buying for the purposes of going up in value. I like cash flow. That's just the way that I am. I like buying an asset and knowing that I'm going to get paid month after month after month, or quarter after quarter after quarter, because now what I'm doing is I'm just working to stack the cash flow. I'm just trying to buy more of these cash flow producing assets that every month I'm getting paid more cash flow, more cash flow, more cash flow, because that's the way my mind works. Other people don't like that. because the cash flow gets taxed. If a company is paying you with dividends, that means the company is sucking money out of their bank account, and instead of trying to grow the company bigger and faster, they're paying their shareholders. So some people don't like that. Other people say, you know what, I like a company when they take the cash and they reinvest it back into the company. That way they can't pay me a dividend, but that's going to make the company grow bigger. It's going to make the company grow faster, so the stock price grows faster. Some people like that. Plus, if you're not getting paid with cash flow, you don't got to worry about paying taxes, because when you get rental income or when you get dividend income, that's taxable income. Now, of course, as an attorney who's not your attorney, I can tell you that our tax code does provide benefits to investors. When you make money from your rental properties, when you make money from your stock dividends, there are tax breaks that you can get that are not available to people who are earning money from their jobs. If you're just earning money from your job, you're going to be subject to the highest tax rates and the least amount of tax deductions. When you're earning money from your investments or your business, now you have the potential to earn lower tax rates and higher deductions. That's the way that our tax code works. So when you're earning money from your job, you're not subject to those write-offs. You're not subject to the lower tax rates. But with your investments, you do get those things. And this is where, again now, understanding the system. Our system is designed to benefit people who understand the capitalist system. That means our system, whether it's the tax code, how much money you earn, how much assets you earn, how much freedom you have, our system is designed to benefit people who understand the capitalist system. Our system is designed to benefit people who understand how to invest and how to build businesses, period. Not everybody can be an entrepreneur. Not everybody should be an entrepreneur. But every single person in America should be a business owner. Don't go out and build a business if you're not an entrepreneur, but you can go out and invest in businesses if you're not an entrepreneur. Both of them will allow you to win in this economic system. You don't have to go out and build a business, but you can invest in other businesses. Everybody can do that, and you can start doing that with as little as $100, even $10, even $1.
If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.